This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pachortis. Thanks for joining us at XM.com. Hopes that the Biden administration will unleash a federal spending spree came to fruition late last week after the incoming U.S. president pledged a new relief package in the trillions of dollars to revitalize the American economy. The details of this plan will be unveiled on Thursday in what will probably be the week's main event. Global markets were over the moon. U.S. stocks roared to new record highs, crude oil jumped to fully recover its pandemic-related losses, and Treasury yields spiked as investors dumped bonds in anticipation of bigger deficits and a rosier economic outlook. The wild card was the dollar, which raced higher too. Promises of runaway government spending are usually a negative input for a currency, but lately this dynamic has been unable to keep the dollar down. So what has changed? It seems the market is becoming confident that all the spending will ultimately turbocharge U.S. growth. The narrative so far was that all the Trump-era stimulus would only generate some inflation down the road without any spectacular growth, which depressed real interest rates. But with Biden promising to deliver even more juice to the party, investors now seem to be bracing for a spell of scorching U.S. growth. The rosier outlook for growth has allowed real U.S. rates to edge higher as investors reevaluate how quickly the Fed might scale back its gargantuan liquidity programs, breathing some life back into the devastated dollar. Can this comeback last? Admittedly, there is scope for the rebound to continue. If the avalanche of federal spending truly reawakens animal spirits and revivifies the U.S. economy, the next big narrative in the markets may be when the Fed will begin tapering, whereas other major central banks probably won't have the same luxury. The euphoric mood has inflicted the most damage on gold prices and the Japanese yen. Bullion fell like a stone on Friday, sinking as the growth trade fired up and investors rotated towards riskier plays. On the data front, the U.S. jobs report for December disappointed, with non-farm payrolls falling by 140,000 for the first time since April. Nonetheless, markets barely reacted. Overall, investors are in a slightly cautious mood to start the new week without any significant news behind this. This is today's Daily Market Comment. Thanks for joining us at XM.com.